Ibukubuku FX silwa nendlala sibulala poverty. You already know what it is. So this is the Forex Factory calendar marking the third week of the month, Q3 of the month. Right now it's Monday, so the only reason why I look at the high impact news calendar is to see on which days volatility will be injected into the markets, or which candlesticks on the price on the charts will have the most liquidity. So a candlestick that is like on the hour of high impact news events, like at that specific time, that specific candle, it holds immense amounts of liquidity. So if that candle is like the high of the day, that high is liquidity, the low is liquidity, and so on. So we want to I'm studying how to actually trade on these times, you know, during the day, during the week, gauging on which day of the week the high of the week or the low of the week is most likely to form. Yeah, so yeah, I'll just hold it at that. Since it's Monday today, on Monday, if there's no high impact news events, we don't do anything. But if there is a high impact news event, we should consider doing something. If there's no high impact news event on a specific day, you don't do anything unless there is sequential SMT. That's the only reason why I ever consider going into a position. Okay, so right now we're in the second quarter of the first quarter of the 90-minute cycle of the London session. London session is just the second quarter of the day. Alright, so what's going on in price here right now? I'm just going to go onto the higher time frames to see it properly. Okay, so I believe this is Friday's high. This high is Friday's high. We've traded above Friday's high right now, and we've traded above the Asian session. Let's take a look up here. We've traded above Friday's. Well, we haven't traded above the high yet, but we're probably going to trade above the high, trading above Friday's high and the Q1 of the 90-minute cycle. And over here, Friday's high is way up here, and we haven't traded above it. We're just above the Asian range, but we're not above Friday's high. We're not above this point right here. So we can consider that sequential SMT. And this point here was above this point. So I'm just going to do this. This was internal sequential SMT. So just as soon as that candle closes, this SMT will be confirmed. Bearish sequential SMT. We'll also study why price just decided to shoot up. The only thing that causes price to turn is sequential SMT. And of course, liquidity. Point of interest, like fair value gaps, breaker blocks, order blocks. Those are the kind of things that make price turn. But having sequential SMT paired with it is much more powerful. Okay, so over here, this is Friday's high, and this point here is the internal high on Friday. Right here, this point right here is Friday's high, and we've traded above Friday's high, and we've also traded above this point. See? So this is a cracking correlation. Might just be like fucking continuation, like breaking the previous day's high to continue higher. But if I'm not mistaken, this is the definition of SMT. This should cause price to come lower. Over here, we failed to trade above previous day's high. That should cause price to come lower. Let's take a look at why did price just shoot up. Why did price just shoot up? It's a very minor retracement. Could be worth something. Very, very minor retracement. Okay, so we've got the first quarter of the London session. This is the first quarter of the London session if we're dividing it by 4. Yeah, traded lower and broke price. What about the fucking, the day? There's the previous day's internal low. We failed to trade below it. And here, the previous day's internal low, we traded below it. Okay, so here's the previous day's internal low. Price goes from internal liquidity to external liquidity. So there's a fair value gap, low, price raids that low, stop raid. This is manipulation. And over here, at the very same time, price is all the way above it. We have failed to trade below that previous day's internal low. We are not below the previous day's internal low. So this was sequential SMT. It's sequential because it happened between two different quarters. Okay, so that was the first stage in the sequence. It's always a 3-stage sequence that we want to see. It's higher time frame sequential SMT and then lower time frame. So like when I say that, I mean this was the Asian session and this is the London session. We failed to trade below the Asian session's internal low from the first quarter in the 90-minute cycle. Okay, that was the first stage. Now we're looking at this cycle here, the 90-minute cycle. This is Q1, Q2, Q3, and Q4. Right? This is Q1's low, the same low, the very same low. It's Q1's low. Over here, price broke structure and it failed to trade below Q1's low, traded into this fair value gap / order block. You come this side, you come to find out that price, whilst trading into this fair value gap, this was the first quarter of the 90-minute cycle. Price traded right below that, and at the same time taking that previous session's internal low. So this is all manipulation. The reason why they call it manipulation is because there's a specific crack in correlation that's happening in price right now that the average eye wouldn't see, you know, but we all understand it in different ways. So as soon as these kind of things happen, you expect to just, that was the second what you call it, the second sequence in the cycle. It's a 3-stage sequence. This thing is like always a 3-stage sequence. After that, we had, and at the same time, there's a fucking huge fair value gap here that we are literally trading into. We broke structure over here and retraced into the fair value gap. Stop loss at this low. You know, 1-minute time frame. You just want to be jumping in on the fair value gaps. So this is the fair value gap that's already like solidified. Price is cracking over here. It's failing to trade below this low. Here, it's raiding that low. It's like completely inside that low. There's the low here. We come back to trade into it. And we wait for a break of structure. Here's the high. Okay, see, we trade up. That's the high. We fail to go above that high. We trade lower, creates a high. We come down. We trade above this high. Fair value gap. Stop loss below the low. Retraces. And after that, yeah, man. So right now, what's going on? We're currently above the previous day's internal high. Okay, over here we're also above that point. Oh shit, we're actually below it here. Sequential SMT, possibly. Here we're way below it, so man, I think it would be safe to say I would be interested in some bearish momentum. Traded above the true month open, you know, and I'd expect some bearish momentum from this point in time. So I'll just wait for time to like confirm itself and just show me what's going on for real. Okay. Yeah, I missed this entry here. I just missed it. Something did happen here. That was worth considering. Something right now is happening. Rundown of what happened in price. See, we had that sequential SMT that was happening in the morning. Here, NAS 100, we are above the previous day's high, as we saw that in the morning. Unfortunately, like an hour later, I was away from this shit, but nonetheless, above previous day's high, and then in the US 30, we failed to go above the previous day's high. So this was the point where I had anchored that sequential SMT. Right after that, it happened. Mans would be going down to our 5 minutes. This is in regards of the 90-minute cycle of the London session, which is our favorite shit to do. Here as well, we'd expect another cracking correlation going to the downside. So we've got this high, we're going above it, we're going above it. That's the second quarter. What's going on here? Same thing, going above it, going above it. What about here? Well, going above it, going above it. Here, this is where I see that cracking correlation. But anytime you see a 15-minute cracking correlation, all you want to see is a shift in market structure and a return into the fair value gap or the inverse fair value gap, which would be this right here. Sequential SMT, shift in market structure, fair value gap or inverse fair value gap. And lo and behold, price decided shall go lower. And this was in the London session. In the New York session, this is what we would have considered the New York 90-minute cycle. See, this is the first quarter of the New York 90-minute cycle. And then in the third quarter of the third session of the day, we failed to trade above that, leaving a fair value gap, right? NQ, what happened in NQ? We traded above that high. This was sequential SMT. So this would be the first stage in the sequential SMT. If you're brave enough, you can jump in on these highs. But if you want to wait for a second confirmation, this would be the second stage in the sequence. You know, gunning for lows. But anyways, there's always a risk to reward that you would pair with whatever you are doing. You know what I'm saying? Here as well, traded above the first quarter of the Q1 in the 90-minute cycle. Optimal trade entry, sequential SMT, price breaks structure and returns into the fair value gap, trades lower. And yeah, that was the conclusion of the sequential SMT that we saw in the morning. And here in the EuroCAD places, I don't know what happened today in the EuroCAD. It's just fucking, but anyways, this is what we were looking at in the morning. Unfortunately, the limit order did not trigger, but why is it that I was considering? And yeah, last week, this is what happened. Boy, got smoked, got kicked right out. But anyways, let's see collab. Yeah, in the morning, we had the Asian session marked out. Okay, the gray box is the Asian session. This black line is our true open. This is also our true open. We want to buy below the true open, sell above the true open. When do we buy below the true open? When you see sequential SMT occurring between two different assets. Over here, we traded below the Asian range. I mean, I can see that it's hidden sequential SMT. This closed higher. Let's put it right here. Price closed up there. It closed above the Asian session's low. Price closed above the Asian session's low. Okay, but over here, what do? We closed below the Asian session's low. So this is why I was out here considering this to be something worth partaking in. I think there's also, yeah, there's the first thing that ticked me off was this is Friday's low. We are trading below Friday's low. So this was the first stage in the sequence. We were trading below Friday's low. Over here, we were like way above that. Here's Friday's low. Well, not really Friday's low, but like at this point we were above it. That was the first stage in the sequence. The second stage in the sequence would be this one here, trading below our Asian session. And after you've got those two in place, it would just be you waiting for a shift in market structure and returning to a fair value gap, or if using your fib retracement to the 69% level, 60, 61, 70, 70, 79. Those are the points. But I specifically wanted it to come down here to the 79 due to the fact that this fair value gap was my first point of interest, and this is where I'm below the true open of the day. But we did definitely come back into the proper optimal trade entry, but at that point in time I wasn't interested in like doing anything because I had already set this limit order. And yeah man, price definitely went to our drawn liquidity, and when it arrived there, it formed SMT again, coming lower. This is why we're retracing, because there's a huge SMT between these levels. But we'll be back tomorrow and see what happens in our London session. I think I'm comfortable with the London session. All the other stuff, yeah, it messes me up, so I'll just stick to one session, and in due time I'll probably decide whether we're sticking with the index futures triad or the forex triad. So this is Sobona Kusasa. Yeah man.